This is not financial advice. I'm recording my thoughts about 4 stocks in the cybersecurity and related sectors. These 4 stocks form like a mini ETF in the cybersecurity space. Cybersecurity is an important theme for this decade, and these 4 companies consist of large, medium, and small companies with respect to revenue. For example, Palo Alto Networks, largest of all, makes about $6 billion of revenue annually, and SentinelOne only makes about $300 million of revenue annually. So this is a mix of large, medium, and small companies. Number 4 in this list is SentinelOne. SentinelOne's current market price is about $15, and with reasonable assumptions, I'm estimating $30 price target in 2027. That means 100% gain if we buy right now in 5 years. And the desired price for me is actually when I achieve 100%. So the desired price would be same as current price, $15. And you see 2 numbers in red. They represent the numbers with great execution. I'll show what that means in a bit. And if they can execute very well, then they can get to $48 in 5 years. So that's about 220% gain in 5 years, which is a great gain. Now let's look at the actual valuation metrics of what I have even assumed for this company. You see 2 evaluations, one on top with reasonable assumptions and one on the bottom with great execution. In the reasonable assumptions, I assumed 40% revenue growth because this company grew its revenue by about 100% plus in the past few years, but as the company gets bigger, it's not easy to grow that fast, right? So 40% is reasonable. The most important thing is whether these assumptions make sense or not. For example, I cannot assume 100% growth rate in revenue just because they grew 100% plus in the past few years. 40% seems reasonable because SentinelOne is a quality company and they offer end-to-end solutions. Valuation leading to $30 price target assumes 40% revenue growth, 20% net profit margins, and a 27.5 multiple. And the valuation at the bottom, which is the great execution one, in that I estimate 45% growth and 25% margins and a 30 multiple. So both these valuations, in my opinion, are rational. So I'm confident that SentinelOne can get to $30 in 5 years easily, and then if they continue to execute very well, they can get to $48 and triple my money. Number 3 is Okta. Okta is a medium-sized company. They make about $1.7 billion of revenue annually, and they're growing in a double-digit pace. For example, in the most recent quarter, they grew their revenue by about 33%. The current market price is about $82, and current market price is about $82, and not long ago, it was trading at less than $50, and I could have bought at that time, but I missed the boat. But currently, I do not own Okta. So in 2027, with reasonable assumptions, I'm estimating $148 price target. So that's about 80% gain, which is good if I buy right now. But my desired price is actually half of the price target because I always look for a 2x in 5 years as a minimum. Because of that, the desired price to buy Okta is about $74. As I said before, numbers in the red text represent the numbers with great execution. So if Okta can do great execution, they can get to $248, and that's about 200% gain. Otherwise, 3x gain in 5 years, which is a great gain. And I want to show the valuation metrics for this. The one on top represents the valuation with reasonable assumptions, and the one at the bottom represents the valuation with great execution. This company grew its revenue at about 33% in the recent quarter, and typically they were getting 40 to 45% in the quarters before. So I assume 25% growth rate for this company and 20% net profit margins and a 25 multiple for the reasonable assumptions case. And for the great execution case, I assumed 30% growth rate, a 25% net profit margin, and a 27.5 multiple. Number 2 is CrowdStrike. CrowdStrike is currently trading at about $128, and I'm estimating $181 price target in 2027. CrowdStrike is an amazing company. It competes with the likes of Microsoft, and CrowdStrike is number one in a lot of metrics. When you measure cybersecurity companies by certain metrics, CrowdStrike come as number one in a lot of those metrics. That's why this stock trades at a premium. So if I buy right now at $128, I only get 41% gain, and I do not like that. I at least want a 2x, right? So that's why my desired price would be $181 price target divides to 2. So that's about $91. So I want to buy CrowdStrike stock when it gets to $91 heavily. Otherwise, I can only take a small position in CrowdStrike. And with great execution, this company can get to $348 price by 2027 or 172% gain in 5 years. I'm going to show the assumptions now. On the top, we have the reasonable valuation, in which I assumed 25% growth rate, which is reasonable, and 25% net profit margin and a 27.5 multiple. You can see I could have applied 25 multiple, but I applied 27.5 because CrowdStrike is a quality company. I'm giving it a premium. And with great execution, I'm assuming 35% growth, 30% net profit margin, and a 30 multiple. And a lot has to happen for this to go through. Number one is Palo Alto Networks. It's currently trading at about $190, but I'm only anticipating $253 price target in 2027. So that represents 33% gain if I buy right now. For me, the desired price to buy is about $127 because that's when I will get a 2x. And with great execution, this company can get to $341, and that's about 79% gain. For the other three stocks that we just discussed, CrowdStrike, Okta, and SentinelOne, with great execution, we can get to triple-digit growth and sometimes 200% plus, right? But with Palo Alto Networks, we can only get 79%, in my opinion. And one of the reasons is because Palo Alto Networks is already big and it's already an expensive stock. It's cheaper compared to its peers, but then since it's huge, $6 billion of revenue, the growth will be in the 20% range. So that's going to attract a lower multiple. Let me show the valuation for Palo Alto Networks. In the reasonable valuation case, I assume 20% growth and 25% net profit margin and 25 multiple for this company, with which this company could be about $253. And with great execution case, I assume 25% growth. I think it is hard to do because they are already growing at 20 to 25%. And as they get bigger and bigger, they're already big. If they get even bigger, it's even hard to grow. But I'm estimating 25% in the great execution case, and a 25% net profit margin and a 27.5 multiple. And that brings us to $341. With this $341 is not even a 2x from the current price. So even with great execution, I'm not getting a 2x. In conclusion, these are the 4 stocks that form a mini ETF in the cybersecurity space. I personally do own a small position in SentinelOne and CrowdStrike, and I'm yet to open a position in Okta and Palo Alto Networks. Currently, I'm comfortable opening a small position even in Okta and Palo Alto Networks, but I will wait for a better price. But for all these 4 stocks, if they get to my desired buy price, as I indicated in purple text, I'm going to invest heavily into these stocks because cybersecurity is a growing theme and it's going to be an important sector for this decade.